right, I believe you're good to go. Um, Good evening, everyone, once more. I hope you've had a great weekend as well uh, a great second week of the month of. Sorry for that. All right, sorry for that. So, welcome to our usual Sunday weekly session, whereby we discuss what we are anticipating for the coming new week. So I want everyone to go to the chat section. I need us to have an interactive session. Please, the 14 of us, just go to the chat section. Let me know where you watching from. Let me know if you can hear me. Let me know if you can see my screen, uh, so that we can jump into the fundamentals for this week. And then we're going to break down the technical in a couple of pairs. So just go to the chat section and confirm if you can hear me. And if you can as well see my screen, kindly do that right away. All right, from Brian, it's clear. Kerubo, it's clear. All right, from Sam, it's clear. So I'm going to look at the dollar pairs. I'll look at the JPY pairs as well. And then I'll close with gold. I'm going to give out the long-term views. I'll give out the intraday views. And then from there, so sorry for that. Sorry for that, guys. I've been talking and I'm muted. Sorry. Thank you much, Karen. So I was saying these guys. Sorry for that. I need to go back. Sorry for that. So like I was saying, on Friday last week we had NFP, and maybe just to give out some a little bit of what happened. Whenever we have a negative NFP for the dollar, that simply means the economy is doing poorly. Guys, once more confirm if you can hear me. That means the economy is not doing really well. And that's why we had whatever you can see. We had a negative. We had a negative dollar. That's why gold was buying, and other pairs like Euro USD, GBP USD was buying. So if you look at unemployment rate, uh, and you also when you look at the average hourly earnings, they were maintained from the forecast. And then that is on the dollar. That's why we had whatever we had on Friday. Thank you so much, guys. I'm sorry for that. I was speaking while my mic was muted, but I believe right now you guys can hear me. So this week, starting from tomorrow, Monday, it's a bank holiday for the Japanese yen. It's gonna be a slow day because we really don't have much on the red folder. That's all about the high impact fundamentals or other news. And then on Tuesday, we're gonna have ADP weekly employment change. It is tentative, which means it could either happen or not. Whenever it's tentative, that means it can happen or not happen. It might be even postponed. And then the same Tuesday during the New York session from 4:30 p.m. Kenyan time, gonna have very important news. That is CPI. Gonna be watching that news. It's gonna be important for us, for those who are trading the dollar. And then on the same Tuesday at 6 p.m. Kenyan time, we're going to have the new home sales. Wednesday, during the New York session, we're going to have PPI, the core retail sales for the dollar. Thursday, during the London session, just 1 hour to London session, but during the Asian session, we're going to have GDP for the pound. We're going to have GDP for the pound data being released. The same Thursday, during the New York session, 4:30 p.m. Kenyan time, that is 8:30 a.m. New York time. We're going to have unemployment claims, the Empire State Manufacturing Index, the Philly Fed Manufacturing Index. So it's up to you to go and read and get to understand what does this all mean, but you can take advantage of that. And then on Friday, it's gonna be a clean day. We really don't have anything. So basically, the whole of this week, it's gonna be a busy week for the dollar because we have a lot of the red folder that is affecting the dollar currency. So that is it basically from the fundamental aspect. So when we go to the technical point of view, I'll be looking at I'll give out the long-term projections, and then I'll narrow down to the intraday and the midterm swing projection. So we start with the dollar index. We're gonna start with the dollar index. We start with the dollar index. All right. So from the monthly perspective right now, on the technical point of view, as far as I'm concerned, I want you guys to understand something that is very, very important. When it comes to market structure, there's what we call the candlestick break, we have the structure break and all that. So when you look at the month of, I think it was the month of July last year, and the month of June, the June candlestick was engulfed by the July candlestick. And when you look at the bodies, let me try to zoom this. And you look at the bodies, these, in terms of liquidity, these are more of type 1 area of liquidity. And this bullish candlestick had engulfed the bearish candlestick. That's a clear indication, as much as you've been ranging for the remaining months from August all the way to December, and maybe right now in the first month of this year, 2026, I'm looking forward to see dollar pushing up to come and react on these zones. We have the 100.9 mark level. We also have the 103.87. Although this is a long-term projection, depending on how the economy is going to perform this month. So clearly, that tells me on the higher perspective. I mean, on the higher perspective, I'm very bullish on the dollar, right? I'm very bullish on the dollar. So when you come to the weekly time frame and the daily time frame, maybe I'll check on the daily time frame. We had already seen last year we had a confirmation that the trend had confirmed for us is going to be bullish. In fact, all right, perfect. So the trend had already confirmed to be bullish based on whatever we saw on this daily shift, all right? If you check on this high, we could see we have a reaction above it, but I don't know if we have a body candlestick closure. Let me see. Yeah, we have a body candlestick closure above this level. So that is a clear indication we're going to be bullish on the dollar long term, right? Of course, the immediate reaction based on what happened last week on Friday, we're going to have some slight reactions to the bullish levels, I mean to the bearish levels, but I'm strongly bullish on the dollar. So if you maintain the daily time frame cycle, these were examples of resistance, support flips. Let me just delete them. Support, resistance flip, and all that. And if you see what happened, price reacted, then boom. Right now, if you look at the current level where dollar index is reacting from, we have an area of liquidity here, which is a type, type 5. Other people call this an order block. You can as well call it as in a simple price action. You can call this bearish engulfing candlestick. For us, we call this type 5 area of liquidity. Price reacted, of course, on this is a zone that I was waiting for the longest time to see price reacting from. But based on what is happening right now, if you narrow down to time frames like 4 hours, 1 hour, you're going to see a lot of information. So there are two levels. So we have this level of 98.8. Then we also have this level of 99.33. So as far as I'm concerned, since price has already done a shift, I want you guys to look at this. Price has done a shift, although it's not really clear. Let's see, boom. Yeah, this is like more of a transition. If I turn to the line graph, sorry, this is more of like a transition. If I turn it into a line graph, we have already had price reacting above this 98.3 level, which is an idea, or it's a clue that we might be pushing up. So probably the market is gonna do this. The dollar index will come to this area of liquidity. You see this candlestick, this one, and then maybe you're gonna push up. The first target is going to be here. The second target is here. If this zone is broken, the 99.7 level is broken, we're going to push higher. That's my view when it comes to the dollar index. So if you narrow down to 4 hours, 1 hour, the only area of liquidity that I'm seeing that has not been really been mitigated based on, let me go back to the daily time frame first. So we have this, then we have this level. So I want us to see what is, if we have any area of liquidity within that zone. So if you go to H1, I can see some sort of liquidity engineering. Yeah, that's what clearly I'm able to see. So probably this is the level that you'll see price coming to, because there's this imbalance and there's some sort of some liquidity that has not been mitigated. If I even narrow down to 15 minutes, sorry, if I narrow down to 15 minutes, yeah, actually that's the best area we can look forward to buy more. So, yeah, that's the best area that we can even look forward to buy more. So if I go back to my H1, go back to H4, of course, that is a clear liquidity engineering, normal liquidity engineering. If I go to H4, we have what you call a weak overlap. So that's a zone that I'll be expecting to see this price coming to before we push massively to the upside. Though, I also want you to take note of this. If you stretch this is a level of rejection, rather resistance. And price, if you extend, price has broken. You see, these are a couple of touches. If you look at it very well, we have a couple of touches technically, just using the technical aspect. We have that touch, we have these touches here, and we have these. So the market has broken above this level. So there's also a possibility, even before we come lower, we might come to this zone, might come to this zone, and then we continue pushing up. So that means probably once the market opens, the market opens a few hours from now, we're going to have a slight reaction of bears for the dollar. And even that is being confirmed when you go to H1. On the H1, sorry, I don't know if my screen is moving. Sorry for that. When you go to H1, sorry. There's some sort of liquidity engineering here. There's this liquidity engineering. And if you look at how the wicks reacted, there's some sort of rejection. So I'm looking forward to see some sells. Once the market opens, I'm looking forward to see the dollar drop. But what I want you to understand is that we are strongly bullish on dollar. But we don't just buy or sell. We must have a confirmation. That is my view. That's my view. That's my view on the dollar. That's my view on the dollar index. So I'm still looking forward to see dollar pushing all the way to this level. So if you're a swing trader, once price comes to 97.89 levels, the good thing about HFM, you can always trade dollar index on your MT5. So you can wait for price to come here, execute a buy from this level, then push. So tomorrow is a Monday, as usual. In the morning, we're going to do our intraday breakdown. We're going to give out heads up on what we'll be looking forward to trade tomorrow, whatever that will have matured. You have to wait for confirmations. So that is it. That's my view on the dollar. So let's go to Euro USD. We look at GBP USD, and then I also look at gold, and then I'll go to the JPY pairs. I don't know if Henry, Sage, keep this meeting. Let me just confirm. All right. Okay. I can see Job or Kim is around. So maybe I can give Kim a chance to talk about the dollar pairs or the JPY pairs, and then I'll talk about gold. Kim, are you in position? Kim FX, I've allowed you to unmute yourself. Are you in a position to?
I think we're in sync. Let me just do the JPY narrative, then give my 1-2 pairs, then you conclude very fast.
Okay. So you give out the long-term view and the intraday views, eh?
Okay. So good evening.
Kim, are you still there?
I am here. I was sharing screen now. Is my screen visible?
Yeah, from my end, I can see a screen. Members, you can confirm on the chat section if you can see Kim's chat.
So yes, so let me see. I think if Basete can see it, then we can continue. Now move these things. Kando. Yes, now in terms of I think Basete has handled the dollar narrative, but in the long run, maybe what I can add is that the DXY typically is in a range, and you can see also I also marked an area 5 liquidity there. So you expect a reaction from that zone. If not that zone, you expect a reaction up there. But typically for ranges, we usually do most of the times is we buy at the bottom of the range, sell at the top. So still have a reaction there. Let's wait see how market will react tomorrow as it opens. We have a typical type of 5 liquidity from that zone. That said, I'll quickly move to the JPY, the yen narrative, so that you can see where the yen is positioned. So in the long run or in the higher time frame in terms of weekly and daily bias of the yen, as you can see, the yen has been bearish for a given specific period of time. You can see even from 2020 up to date, the yen has been heavily bearish in terms of weekly analysis. If you still stick to the weekly cycle, we move to 4 hours. As you can see, the yen has been selling all along, forming lower lows, lower high, lower lows, lower high, lower lows, forming clear shift to the downside. Now, where we are in terms of price action, as you can see, the yen has been ranging in this zone from December around 22nd, and it tried breaking, I think, this week or around January, as you can see. So we're typically in a bearish momentum or experiencing a weak yen. In terms of daily, I think had marked a zone here to be filled. I think subsequently, last year we had marked this zone, I think, and price is actually coming to mitigate that zone of that base or support that I've marked here. We still have a clean balance to be filled here in terms of price action. So currently, we're heavily bearish on the yen. And as you can see, typically, as I have marked, the yen is now showcasing momentum. And we are heavily closing down to close that gap down there. So we'll be heavily bearish on the yen. Subsequently, on that period, in terms of the pairs, I think we had this setup we shared last week on GJ, whereby price action formed a shift to the downside, to the upside rather, and did a retracement back to this area of liquidity marked here by that horizontal line, mitigated an area 5, not area 5, sorry, area 1 liquidity here, closed above and then continued buying. So we'll still continue holding this trade. I think on Friday, most of the guys in the community took some profits from that zone, actually TP1. So we expect price to continue buying up to that zone, targeting maybe on my end at 9R for the guys who took the SL. If you took a tighter one, maybe it could be a bigger RR. So we still continue buying GJ as we open up the week. For the guys who maybe missed, if we get a clear shift to the upside and get a retest, maybe on tomorrow or Tuesday, we'll still continue buying for the long term. So for this trade, the guys in the communities think we shared the setup and took some assets, but you are holding it as a swing position. On that note, in terms of other pairs, I think what is in my watch list, apart from GJ, I am looking at AUD AUD also has been bullish in the long run or for significant period of time. From I think the bullish momentum started around 19th, 20th November last year. That is 2025 up to date. We're still heavily bullish on the AUD against the dollar, the Australian dollar against the dollar. We had a clear shift to the upside here, or a change of character, and then we have a retracement. Significantly, when you go back to subsequent time frame in terms of the time frame cycles, depending on the one that you follow, I think we have a clear area 1 liquidity there and a clear support zone. So tomorrow we'll be interested in seeing how this market will open, and we'll be typically looking for buy opportunities for AUD USD in this zone. I think on Friday we were quite not quite active because we are already having GJ running and also having NFP. So we'll be eyeing on how USD, no AD USD will be buying or will be looking for buy opportunities in this asset as we open Monday and Tuesday. So for that one, will be looking for buys. So the same will be updating in the communities. Lastly, the dollar against the yen, I think significantly this pair, this asset has been heavily bullish. And I think before we closed the year, we had a nice buy here. Is it had a nice buy, I think on November, I think around this zone, yeah, before this move happened. I think we had a nice buy with November. Yes, we had a nice buy at this zone. So typically we have been following this trend for some time now, this bullish trend of USD JPY. As you all know, in terms of price action, the trend is your friend. It's good to be in line with the trend. Now, typically, the yen is quite bearish and the dollar is slightly bullish more than the yen. So we'll be looking for buys in this. In terms of price action on higher time frame on weekly or daily, we are targeting these key zones here that we have circled on the left side. You can see up here you have a rather type 5 liquidity to be mitigated, and price action is still buying to mitigate that zone. Now, when you come down to subsequent zones or liquidity points, we have a clear shift to the upside of the USDJPY that happened on Friday after the NFP news came out, but we're still not late catching this trade. I think we have, in terms of liquidity, we have impure liquidity that we mitigated, and we have type 1 liquidity there sitting around very nicely. So as we open up the week, I'll be interested to see how price action open up tomorrow. And if price comes to this my zone as marked, I'll be looking for buys to the upside on the dollar against the yen. So I think for this one, we'll anticipate and see how price action behaves tomorrow. But we are heavily bullish on the dollar against the yen. I think with that, Basweti, I am done. You can take over.
All right, thank you so much, Kim. Let's go on. Let's proceed. So I'll go straight to these other pairs. Just a moment. All right, that's on the. Oh, I need to share my screen. My screen is visible. You guys can see my screen. There's somebody who's in the meeting with the dotted lines. Who is that? All right, let's look at. By the way, there was that very nice setup that we had last week on GJ. Kim has talked about it. It was a very nice setup on GJ. This setup made me to pass phase one of the account that I'm currently trading. It's done around, based on me, it's done like more than 10 R. Right. So I'll try to talk about gold, give out the long-term view, and yeah. So let's talk about gold. We're going to talk about gold. Let me clear these drawings. Let's talk about gold. Gold. Guys, as I try to break down these things, whatever strategy that you're trading, as long as it's working, sometimes I meet different traders with the different trading strategies, and as long as you have an edge in whatever way you are approaching the market, all these things are more of the same. We might approach the market differently, but in most cases, you're going to end up in the same are going to end up the same ideas. You will be trading probably strategy, ICT, whatever. You'll be doing Wyckoff, you will be doing Elliott Wave. But at the end of the day, we might narrow down to having same setups. So that should not confuse you. Those guys who are in our community, let's stick to what is within our strategy. The playbook is about to be done. We'll share in the group. It's going to guide you on the things that you're supposed to follow in the chart. So I'll start from the long-term perspective. I did these early the other week, but for better understanding to everyone. So last year candlestick on gold closed at around 45, if I'm not wrong, around 45.50, and we've been having price trading on the pools of liquidity. You see this level between 43.20 all the way to 45.50. As far as I'm concerned, to me, that is an area of liquidity where we have strong pools of liquidity. Anything could possibly happen here. So I want us to go to the lower time frame so that I can explain to you what's my view on the same. So can you guys see my screen? Oh, it's okay, Esther. Can you guys see my screen? Can you guys see my screen? Okay, perfect. Thank you. So when you go to the monthly time frame, we have several key levels that have not been mitigated. The first key level that I'm really looking forward to have important reaction, we have this key level of 42, 14, and around 41.60. Then you also have another key level of around 40.80 all the way to around 4,000 level. And then below it, we have the 38.59 levels. So you see, as much as we are on a strong bullish trend from the higher time frame on gold, we need to understand that the market will always come back, try to get liquidity and keep on pushing higher and higher. Even when you remember the last swing that we had from last year at around 31.24, the market took almost a month to come to our entry before it continued with the trend. Sorry for that. Continue with the trend. So when you come to the lower time frame, if I go to the line graph, there are those areas where we have the validation and invalidation points. Actually, these are zones that I'm waiting for to see the market really pushing up. These are the zones that I'm really waiting to see the market impulsively push up, because when this market has been buying, I want you to take note of this. We had this zone of 42.50, whereby we had some strong sales that took price to the downside. We had this zone, the 42, around 42. Let me use a line. We had some pools of liquidity here at that swing point, 42.50, 42.51. The market sold. But now, before this zone was being taken out, price came all the way to around the 4,000 levels, created this area of liquidity of 40.85, then also created this area of liquidity of 42.17. So if you go to the candlestick, you're going to see validation and invalidation points. Are those areas? Other people call these order blocks. For us, these are type of liquidity. These are special case. These are type of liquidity. Also, these are type of liquidity. So these are the zones that you're going to look forward to execute our massive buys. All right. So we had sellers swinging from this zone. Then later on, we see the momentum kicking in all the way to where we are right now. At the moment, where we are trading, that is above the 43.20 all the way to the 45.50 zone. Don't be surprised. Let me show you something. This weekly time frame, and this is an example of a candlestick body, a candlestick break. You see this bullish candlestick, this candlestick of 22nd December 2025. Then we have this bearish candlestick of 29th deck last year. And now we have this week, the first week. So I want us to look at the liquidation that is happening here. there's a high chance, as far as I'm concerned, I'm going to look for sales from this area. People have this tendency of saying that since gold is just bullish, we just continue buying. You buy up to where? You don't just buy. You need to know where are you buying from, where are you selling from. As much as the market is buying, it has to sell. As much as the market is selling, it has to buy. So our work is to know where do we buy from or where do we sell from. Now, since we are on the weekly time frame, and maybe let me say this in kwa ile lugha ambayo everyone else will understand. To me, this is like a bearish engulfing candlestick. And then we have some sort of equal weak reactions. Sorry. Are you guys following? Are you guys following? Are you guys following? Let me see on the chat section if you guys are following. I know that people love trading gold. This year I might do 70% trading on gold. Then maybe I'll give other pairs, or I'll do 60%, 40% to other pairs in my watch list. All right. Now, when you look at this candlestick and this one, in terms of the weak reactions, I'll probably say this is more of like a type 5. But this is where we have our pools of liquidity. So, really, you avoid a lot of, but these things are seen on the lower time frame. So if you go to the 4 hours time frame, so first of all, so that I don't confuse people, I'll be so keen to buy from these zones. I'll be so keen to buy from these zones. I'll be so keen to buy from those zones. Huh? Just a moment, just a moment. I'll be so keen to buy from those zones. Just a moment. Yeah, you see this zone, I'll be interested to buy from this zone. Of course, once I see a confirmation, if this zone doesn't really give me the buys that I'm looking forward to see, then I'll be interested to get other buys from this zone. Of course, after the liquidation convoy cycles. Now, when you narrow down from weekly to 4 hours, since that is the cycle trend, realize that, okay, just a minute, so that I can do this right. Let me avoid confusion. I'll do this. I'll draw this line here. Then I'm going to remove this. Then I'll have this here. So this is my area of interest. So if you look at this current last week candlestick, imekuja near the origin, the open of the bearish candle. So if you go to 4 hours, if you go to the 4 hours time frame, you realize at that extreme point, we have a type of liquidity on 4 hours. And the type of liquidity that we have, is that is a type 1, right? But since we have this weak rejection to the upside, this one here. Somebody's talking? Okay. So since we have this weak rejection, and this qualifies this to be type 2 area of liquidity. I know that people are confused, but that's it. So this is a type 2 area of liquidity. So I'm looking forward to see gold pushing all the way to 45.33 before I think of selling. But again, from the lower side, from the downside, before these markets, my goodness, I don't know if my internet is still. Somebody to confirm if you're still there. You can hear my internet misbehaving. Please confirm if we are together. Please confirm if we are all following. Please confirm if you're all following, guys. Guys, confirm if you're all following. Confirm if you're all following. Okay, thank you. So I was saying this, I don't want to confuse you. Let me finish with the weekly cycle and then I'll come back to the daily cycle. So on the weekly cycles, get this off. On the weekly cycles, upper is significant as well, but that's why we had that reaction. I want us to focus on this extreme end. Yeah, so upper, we have a type 2, but we're going to focus on this body and these wicks. So that's a zone that I'll be interested to sell from. So on the 30 minutes time frame, I want you guys to be keen on that. Here's my chart. So my chart is taking time to load, but let's see. Okay, so so on 30 minutes time frame, we have this. So I'll be looking forward to see gold selling from 45.31. So that's my area of interest. So just know that once the market opens tomorrow, a few hours from now, just know that once the market opens a few hours from now, we're going to have a push to the upside before we think of selling. So that is my view on gold. I'm not a financial advisor. I'm just giving out my opinion based on how I trade in the market. So I'll be looking forward to see a reaction to the downside from this. So I'll show you also where do we, and this is my first target that I'll be interested to see price coming to, because after price doing some shifts from these zones and breaking this structure, the only area of liquidity that has not been mitigated so far so good is the 43.90 level all the way to 43.10. So these are zones that I'll be expecting to see this market coming to before I think of any other move. If this zone is broken, then I'll be looking forward to see gold coming all the way to that level, right? Now, to the buying side, that's to the selling side. So to the buying side, if I go back to the weekly time frame, I can't really see any significant thing. If I go to the daily time frame, the only thing that I can see is a key level. So the first key level that has been mitigated a couple of times is this one here. So we have this key level, which has been mitigated a couple of times. The other key level that has not been mitigated so far so good is this one here. That is 43.32. So that means if I go to my 1 hour time frame, just a moment so that I avoid the confusion, I'll go back to daily time frame. I'll use my daily color code. So daily time frame. So we have this level here, that is 44.48. So the zone that I want to see more buys from is 43.32, at least some massive buys, but at the moment I'm seeing this area. 40, let me highlight it. This is my area of interest in terms of looking for sales, right? This is my area of interest in terms of looking for sales. And then we have a key level here. We have that key level, and we also have this key level, which has been touched a couple of times. So I'm looking forward to see it being broken. So if I go now to H1, if I go to H1, currently, before this market did whatever it's done, this buy here that we have, we had these rejections. You see these rejections? So we have these rejections, which acted as, I'll say it's like more of impure liquidity. If I narrow down and focus on this level, we have impure liquidity. We have impure liquidity. That's why after this candlestick closing above this level, No, it's supposed to be here. Sorry, it's supposed to be somewhere here. Yeah. After this candlestick closing above this level, if I turn to the line graph, sorry, if I turn to the line graph, that's why the market tried to come lower and then push up. So two possible things that I'm intending to see. Okay, for the intraday immediate reactions, I'm still looking forward to see just loading a little bit slower. Yeah, I'm looking forward to see these for the immediate reactions. Price to come to this zone, and then we think of sells, right? Price to come to that zone before I think of sells. Then there's a likelihood of, once the market opens, there's a likelihood of price coming to this area. Let me see. There's a likelihood of price coming to this level or that area. Yeah, upper. But I'm not gonna chase the market. I'll wait for all these. After the market opens, I'll wait for 1 or 2 hours, and then I'll be now ready to execute trades. But if price taps 45, 31, I'll be interested to sell. This coming week, expect some crazy drops. Either on Tuesday or Wednesday there. Expect some crazy drops this week. Don't be surprised to see 3,000 pips this week, but I'll be giving out heads up in the Discord server. While I'm back for Discord, I'll be giving out daily updates on gold, where we'll be heading to. So just to summarize everything, just to summarize everything on gold. At the moment, I'm interested to sell from that. That's my area of interest. If price comes to 43.96 level, I'll be interested to see price coming to 43.32. This is the zone that will determine if I'll continue selling all the way to the 42.20 levels, if I'll buy and target the next psychological level, which is 4,600 as we head to the 5,000 or the 4,700 as we go to 4,500 levels. So that's my view on gold. So tomorrow, once the market opens, during our usual morning session, I'll be giving out more illustrations based on how the market will open, so that we can keep on taking trades. Anyone who has a question or maybe something to say, you have a different opinion, it's allowed. Critique. Anyone? Feel free, the chat section, or you can raise up your hand. I'll allow you to unmute yourself and speak up. Anyone? Gonna have here the next 10 minutes before we end our session. Anyone? Right. I think we can wrap it up. Uh, uh, Tenzi or something. I think you're somebody who commented negatively on my YouTube. Just join the class and you'll learn about that. All right. So to summarize everything, guys, this evening, as we start the week, make sure you plan yourself, have a proper risk management plan, and know what you're trading. Those guys who are trading prop farms, if you're trading a live account, just have a plan. Trade based on your, based on your trade based on your risk parameter guidelines so that you make gradual and consistent growth. So tomorrow in the morning at 9, I'll be live on Discord. Please make sure you join us. I'll be giving out tomorrow's trades during the London session so that if they mature, we'll be able to take them as we go on. Then this week I'll be in Nairobi for a few days. I'm having a blockchain masterclass in Nairobi. So come on Nairobi. The session is free. You can join me in Nairobi. I'll be there for like 3 or 4 days, but I'll be trading and I'll be also live on our Discord and active. So that is it for tonight, guys. Have a very beautiful week ahead, full of tips. Be active, be consistent. Make sure you journal every trade that you're taking. Make sure you be disciplined in terms of applying risk management because two things. If you blow your account, you're out of business. If you protect your capital, even if you have losses, you'll eventually make money. So be disciplined and be sharp every day, no matter how the day looks like, whether you have wins or losses. Always make sure you show up as long as you trade based on your guidelines in your playbook. You guys have a lovely week. Patana kesho kwenye Discord.